Wednesday Wisdom Nuggets brought to you by. This Wednesday, we learn about liquidity. What does it mean for an investment to be liquid or illiquid? By definition, liquidity is how quickly an investment can be converted into cash without significantly impacting its price. Investments with high liquidity are easier to sell and can be sold without a significant difference in their price, while illiquid assets are difficult to sell, and when they're finally sold, they're sold at a larger difference in price. For example, Jane and Peter both run into an emergency and need quick cash. Jane decides to sell her stock holdings, while Peter attempts to sell his car. Jane manages to sell the stocks and receive the cash into her accounts in 3 days. On the other hand, Peter realizes it may take him months to find a buyer and ends up selling the car at a discount to obtain a quick purchase. Jane's stocks were relatively more liquid as they could be converted into cash at a faster rate, and the difference between the price of what she bought the stocks for and what she sold the stocks was smaller than the difference in the prices of Peter's car. Different investments fall along the spectrum of liquidity, with real estate and fine art considered relatively illiquid assets, and equities, bank deposits, and of course, cash itself, falling higher up on the liquid scale. A market may also be termed as liquid or illiquid, depending on the extent to which the assets within that market can be turned into cash without a significant change in their price. If the stocks in the stock market have a high volume of trade that is not dominated by sellers only, it may be termed as a liquid market. Although the stock market is among the most liquid markets, not all stocks are created equal. Some shares trade more actively than others on the exchange. One way to gauge the level of liquidity of a share is to look at the volume traded. You may view the daily volume traded for all shares on the Nairobi Securities Exchange, on the AIB Trader app or online platform. For example, on October 12, 2020, 134,600 shares of Cooperative Bank were traded, but this is modest compared to the 3,140,000 Safaricom shares that were traded on that day, making the share one of the top movers of the day. If this is the general trend, it implies that Safaricom shares are more liquid than Cooperative Bank shares. Another means to determine stock liquidity is the difference between what the highest buyer is willing to pay versus the lowest price a seller is willing to accept for that particular stock. A large difference implies illiquidity. The liquidity of a stock, or any investment for that matter, is important to consider as it determines how quickly and efficiently you'd be able to turn that investment into cash if the need arose. A lower level of liquidity implies a higher risk, as an investor would find it difficult to offload an asset if, for example, its value is dropping or a personal emergency requires speedy cash. Stay tuned for our next Wednesday Wisdom Nuggets.